little part of the morning, they are also now down around 0.4%. So slightly better than the frontline index, but you are seeing pain creep into that basket as well. But let's talk about the markets and take this conversation forward. We have Devang Mehta, who is the head of equity advisory at Centrum Wealth Management, who joins us on the show now. Devang, good morning and thanks for joining us. This is Pavitra. You know, we have been talking about this pain or this fatigue that we're seeing at higher levels. Do you expect for this to persist for some time? Because, you know, for the longest time, we were talking about being inches away from all-time highs, and we're really not being able to get past those levels.
Good morning, Pavitra. Thanks for having me on the show. I think clearly what we are seeing at this point is Indian markets are probably a bit of silver lining, if I can put it that way, in the global dark clouds where there are fears of inflation, there are fears of interest rate hikes, there are also fears of recession or a larger slowdown. That's what the Indian markets are representing at this point, that whether we are oasis in the desert. And I think the clear outperformance that Indian market had shown in the last 4-5 months, particularly, and with very strong domestic flows, 13,000 crore was the last SIP number that we saw for October, and as well as November, where we are again seeing after a dull October for FPIs, the flows have been very robust, around 20,000 crores and more have flowed into November. So my sense is that India clearly emerges as a destination where a lot of global investors, once the global volatility subsides, I think it would be again emerging as a destination to get invested. Very important part is that most of the people in the last 3-4 years have treated 18,000, 18,500 as a ceiling, right? It has to cross that, but levels are not going to be sacrosanct. My sense is that once we get out of this zone where there is a little bit of consolidation which is desired in the markets because of a huge run, my sense is that all-time highs are just in sight. It's just an illusion for markets. But otherwise, I think there are a lot of opportunities emerging out, not only out of the earnings season, but also from the Indian macros and micros. I think a lot of things would emerge out. And for somebody who is in the longer haul, has a lot of money to be made in the next 2-3 years.
Okay, a lot of money to be made in the next 2 to 3 years. That's our cue, right? Where do you make this money? If one had to park some funds now, Devang, in individual stocks, what would top your list?
I think, yeah, rather than stocks, let's first dissect the sectors. My sense is, Sonia, there are so many opportunities which are emerging in the new age space. And by new age, I don't mean the typical internet companies which got listed or the payment companies which got listed. We will not had our site over there. But most of the companies we are looking at are into the universe where a lot of capex is being done. You look at the credit growth. I talk about the 4 C's of the market: the credit growth, consumption, discretionary, as well as high ticket consumption, capex, as well as this all will lead to corporate profitability. So where would the money be parked? Where should the money get parked? My sense is a lot of themes have emerged out of engineering companies. There are a lot of themes which are emerging in energy efficiency, energy management, automation, IoT, robotics. All these industries are ancillaries to play the capex. All these ancillaries are again very clearly a proxy play to play the India, not only the consumption, but also capex, very strong will. And if credit growth happens at 18% credit growth, which is from 2004 to 8 days, we are seeing that type of credit growth. I think BFSI, you can't miss the banking as well as the NBFC universe, particularly the large cap banking as well as the large cap NBFC universe, the consumer NBFCs. I think this all are companies which will do well. Home improvement or building materials, typically in India, has always been a consumption theme, more or less. So my sense is also people are spending. Residential real estate sales have been very robust. As a theme, you can play home improvement, paints, adhesives, ceramics, even cement to a certain extent, which has shallow cyclicality, looks good for the next couple of years.
Some names about these new age engineering and capital goods companies, because a lot of people have bet on this sector per se, but it's flattered to deceive long term. Even the larger ones have not really delivered a lot of returns. So could you give us some more color on these new age engineering and capital goods companies? How do you select them and why will it be different this time?
Yeah, so great question, Rima. Again, so I'll just cite certain examples and why we pick this type of businesses. For sure, are these companies lower in terms of market cap, whether they are mid cap, small cap? The answer is yes, but they are market leaders in their own domain. So to throw some light on this type of companies, there are companies like Honeywell Automation, right, who is sort of a giant in automation globally. Also, the India business has started to see some color. Last 2-3 quarters particularly were tough because of shortage of chips and other supply side constraints. But the company in fact is guiding towards a strong around 2x, 1.5, 2x growth of economic growth that India would deliver. So this is one type of company which one can look at. Typically, also in the universe of where we talk about companies in energy management or to play the EV theme. Also, there are companies like Hitachi Energy, again, just giving an example, a very good company which is into energy management, which has softwares to track the level of transformer oil. A lot of such businesses, allied businesses, this company is into interesting type of a pick for somebody who has a 3-5 year horizon, not even in a shorter term. There are also companies like Siemens. There are companies in the universe. Most of these companies would probably do very well once the capex cycle has already started. People are doing brownfield capex. People are doing greenfield capex. I think all these companies would tend to benefit when probably India INC expands and people are around capacity utilization at this point of time.
Okay, Devang, thanks for joining in and giving us some ideas, some sectors, and the way ahead for the market. So that's Devang Mehta saying that this is the start of perhaps a long-term uptrend in Indian equities and there's lots of money to be made. The ticker though is showing you a different picture. For now, the sensex is down about 0.5%. We'll take a quick break. On the other side, Titagarh Wagons came out with the second quarter numbers. Umesh Chaudhary, the Managing Director and Chief Executive Officer of the company, will be joining us.